All right, I'm back with Jeff Law from Law, Tax, and Financial. And the question that I have for you today is, do you feel completely in control? When tax season rolls around, you're prepping your taxes. What do they usually prep your taxes? January, February, March, sometime in that time frame?
When we're preparing, IRS usually starts to allow corporate returns maybe by mid-January, a couple days earlier sometimes, and then not till more the end of January before they start accepting the personal 1040 returns.
Okay. My question is, do you feel completely in control, like you know to the penny where your taxes are going to be? Now, if you can answer yes to that question, shut the video off because I'm just going to be wasting your time for the next 10 minutes. But if you can't answer yes, that's what this video is about. And it's about one of what I consider to be one of the most fundamentally important business moves that you can make, whether you're in landscaping, excavating, whether you own a carpet cleaning store, whether you own a bakery. I don't care what you do, but what we're going to talk about today is going to change everything and how you interact with your taxes from this point moving forward, and it's pre-tax season planning. Now, this video originated because last year I was being audited by the IRS, and they were going through every single one of my records for the past 5 years. They were interviewing all the people that I'd ever worked with, that I'd ever hired and gone through, and I was sitting at this very desk with Jeff and being nosy. And I said to Jeff, "What are you doing?" And he's putting files away, and he's like, "Oh, I'm just doing pre-tax season planning." And I asked him to explain what that was. And from that point, I'm going to let Jeff take over.
Yeah, it's in a way it's doing kind of a mini return. You don't have your final numbers in, so you're using projected numbers. Most of you, I'm sure, have heard those terms. And that, I guess, rounds up to the complicated side of things, organization, which is one of the things that I see a lot of small business people struggle with. And, you know, you're working long hours, you know, getting your jobs done in that. It's organizing your records and your books is just always, I hear, I don't have time for that. I'm busy making money. But I've had, and I have it sometimes on the good side where people are putting enough money away, but more often than not, it's the times that people just don't understand what they're going to pay tax on, what records they need to keep, and putting aside enough money to account for taxes as well.
I consider it being either proactive or reactive.
Exactly.
What we're talking about today is being proactive. It's about knowing exactly where you are, and I personally am going to recommend starting in October at the latest.
Yeah.
To get your taxes done. So what you really do is you go from January to October and you tally. This is the way I do it. Now, Jeff is going to probably come up with a recommendation of a different way, but I tally everything that I've got for my expenses and for my revenue, and then I categorize it so I know where my advertising expenses, my phone expenses, from January to October. And I also know at that point how much money I brought in from January to October, and that gives me 2 months to plan ahead. Last year, because I did this, it gave me enough time to buy 2 pickup trucks, a skid loader, 8 mowers, a trailer, invest into my retirement fund. I don't remember, what do we call it?
401k.
401k. And to do all of these things that had I waited, I would have been reactive and I would have had no options. My timeline would, and I was talking to other business owners when it struck me that not a lot of people understand or even begin to know this concept. In fact, one of my close friends owns a pretty big underground utility company, and he was telling me about how he negotiated purchasing some heavy equipment worth hundreds of thousands of dollars, and part of that negotiation was they were willing to backdate the purchase date on the piece of equipment to help him out with his taxes. Well, that shouldn't be part of the negotiation at all. You should be able to do that ahead of time and know exactly where you're at. So Jeff is going to be here and help us understand what we've got to do. So what are we looking at? Would you like to see people bring in their pre-season tax planning to you?
Yep, sure. And real quick, I just wanted to expound. You mentioned the key thing. You need to get in by October, or the key to that is be in time to have time to make purchases deferred compensation, which is 401k, or there's other avenues that route. But the important thing is you can't do this December 31st, and then otherwise you've only got that day to run out and buy stuff. Give yourself time to, if you find out you're going to be in a hole with taxes, that you can do something about it, because once it goes to taxes, it's gone forever. So
I like that date, December 31st, because I didn't start in October. I actually started November about 25th, 26th last year with my pre-tax season planning, because it was the first year I heard about it. I was writing out a check on December 31st to a snowplow company to purchase 2 brand new MVP3s, Western snowplows, because I couldn't wait till the very next day. And it was 4 or 5 o'clock in the afternoon.
Yeah.
And I was just going through, got up at 4 or 5 that morning, was going through and finalizing all of the transactions to make sure that it fit into the schedule the right way.
I always am checking my cell phone on the 31st if I'm at home, because I know somebody's making a last minute call or email that, hey, I need to purchase this. Should it be in the business name or my personal? Or there's always those type issues at the end of the year. But to get back to it, yes, the important part of it is you need to have the records, and that's another big thing. If you haven't kept records all year, you wouldn't be alone, but there's really nothing you can do about it then if you have no idea what your revenue is.
Oh, but wait, if you don't keep records, you still have a check register,
right?
And you still have bank accounts. So the way I do my personal books is every month the bank sends me a statement, and it shows every credit card transaction, every check I've ever done, and that's what I use.
Sure.
That's a more accurate register for me than it is my own personal record keeping.
No, that's perfect, and maybe I confused that subject a little bit. It's if you don't go back and total all those things up then until after the end of the year, then it's the same thing. Then you found out too late. But your options after the end of the year, there's still a few with retirement type things and IRAs and that, but it severely limits your options. So what you need to do is, if you haven't, like Stan mentioned, go through those registers. Hopefully you're keeping separate business and personal accounts. It'll make life way easier. And it doesn't matter if you keep track of this stuff quarterly, monthly, depending on the amount of transactions you have. Don't let it pile up where it's a huge ordeal then. Mm-hmm. So I would try to do that. So I keep track of my records almost daily, but of course this is what I do. But certainly the important part is doing it. You need to get your accountant the revenue, which is everything you've been paid for your business, and then all of your expense information. And then you just kind of run a return to date. I usually will ask people, well, what are you looking at the last couple months? Is it going to be similar to this pace? Is business basically done? And the more accurate we are in our projection, the more we'll come in on where your tax liability is.
So is it legal, Jeff? And I know you're not really an attorney by fact, but I have a question for you, an accounting question. Is it legal then for us as small business owners? Let's say we get paid revenue in November, we get paid revenue in December, but we don't deposit that until after the first of the year. Is that in the year that you collected it, or is that the year you deposit it?
A lot of what you're referring to is the difference between cash basis accounting and accrual basis accounting. Most small businesses are cash basis, which means you only report things received January 1st through December 31st. In your example, then, if it's not on your bank statement until January of the next year, that's the year it would go on. Now, if you're holding checks for a couple months and you were to be audited, they would argue that the term they use is constructive receipt. That you had this money and you were just holding on to it to delay it into the next year. But certainly, if you had received a check right at the end of the year and didn't get it deposited, they're not going to have a problem with that. And what you mentioned, do people do that? Of course, I hear that people do that. So
okay.
And then, as far as from the accounting side, when it comes to me, if they just give me their numbers for the year, I would have no idea that they held on to checks.
Okay.
But you could get yourself in trouble under that. You're kind of manipulating the tax year then. Okay,
that's good to know. So, they won't look at it quite so much if it's you deposited on the last day. If you receive the check the last day of December and you can't get to the bank, And you deposit on the last day of the year, or and I suppose that wouldn't be too legal if you asked your customers to put, January 1st of the next year onto onto the check.
I mean, just as you mentioned previously with your friend that has the utility business, I mean, does that stuff happen? Yes. So
okay. I'm just trying to get a very clear path so contractors don't do something thinking that it's okay when it really isn't.
I mean, it's a loose term, but reasonable if you use that. I mean, is it reasonable if you received a check in the last week of December that you didn't get it deposited by the end of the year? Yes. If you received it in October and had, 30 checks that you've been kind of hanging on to, I mean, they know what you're doing then.
Okay.
It's pretty obvious.
Okay. So going back to what do you find is the best way for businesses to bring you their records in any format? Do you prefer Quicken, email to you, or what? We covered the way I use it with using bank statements to bring it in, but
yeah, and I get this question all the time, and I always just tell people, as long as you can get me the numbers, that's all I care about. A lot of people use Quickbooks nowadays. That seems to be the popular one. Either they buy the standalone version and track it themselves, or they do it online, or they have a bookkeeper who tracks all their stuff in Quickbooks. I have a lot of clients that do that. They pay a bookkeeper to do it, so they give them their information. All the receipts that you're talking about, you would give your statement and receipts to your bookkeeper, and then you can run a P&L at any time, which is a profit and loss statement. It just basically lists your revenue and all your expenses by category. Automobile, insurance, accounting, cost of goods, your materials, tools, etc. Be the type of things you would have. So we just list it all off, and then a net income, and from there, if you did this monthly, you could kind of, is January a good idea of my average month, then multiply it out by 12, and that's how you start projecting. And once you have more months of information, obviously your numbers are going to be more accurate, so you don't really need to start doing it right after January, but
perfect.
That's the theory.
So let's do a recap real quick. You come in, you bring in, you do all your expenses from January to October. We're going to use October as our deadline.
Year to date is the term we always use, but yep.
And then you should know that if you have any big expenses coming up, like if your insurance is due, or if you have a big advertising bill at the end of the year, you can also put an anticipated expense amount into there.
Likewise, if somebody owes you money, if you've invoiced someone, if you have a lot of invoices out there, large receivables, let your accountant know, because that's going to be collected by the end of the year most likely, or if it's not, but you need to adjust for things like that. And again, the more accurate, the less surprise you're going to have.
And then that gives you 2 months. That gives you all of November and December. Gives you October to kind of strategize, and then November, December to not only do any 401ks, but equipment purchases or major expenses to make sure that your records balance out. And I think that alone is what puts you back in control of your taxes, and not being a victim, but understanding every single thing, where it goes and where you're going to sit, so when tax season actually rolls around, you can be comfortable and not questionable.
Yep. Agreed.
Perfect.
Yeah. You don't want surprises when it comes to taxes.
No. All right, well, Jeff, thank you. I'm going to put your contact info in this video, and if anybody has any questions, Jeff is a great resource. I tell you, without him, life would be different with my companies. So, thank you.
Thanks, Stan.